investor, that's Mr. Yun, who actually wrote to me, as you can see over there. Now he asks, what's the point of holding on to your REITs portfolio if interest rates go up and if an imminent recession is going to happen? He also asks, what was my strategy in the last cycle, where I actually is detailed in my book, Making Your Millions in REITs. I made a couple of $1 million on a few favorite stocks that is actually Fraser and the Point Trust, as detailed in chapter 9 of my book. The Chinese edition of my book also came out and it's published in China. And now everybody seems to know a lot about S-REITs as well as FCT. Now, as detailed in my books, essentially, I've mentioned that even if you hold REITs through the upcycle, interest rate upcycle, there's a good possibility of making good money if you know how to pick the REITs, read the turning points, and see what are the key linchpins of outperformance. Also in today's video, we will look at essentially which are the REITs that perform during the last interest rate upcycle from 2015 to 2018, and which are the ones that are boobies. Okay, so once again, smash the like button and subscribe to our channel if you like what you see every other week, week in, week out. Tune into our video and also log into GCP Global website for our monthly publication, which we have posted in our website on REITs as well as other investment methods for the last 53 years. So let's move on. In REITs and in REITs acquisitions. Now, as I've mentioned, the key thing we want to address as we start off in today's video as well as in our class this afternoon in detail is that should you still be holding on to your own REITs portfolio, knowing that REITs will be affected by sharp increases in interest rates. And essentially, we also will be studying essentially which are the REITs that outperform during the last interest rates upcycle, which are the REITs that actually bombed out during the last interest rate cycle. And most importantly, can we draw a parallel, similar characteristics to what we're seeing right now? So once again, smash the like button and subscribe to our channel if you like what you see every other week. And if you are interested, do sign up for our class to catch the last early bird special before this Saturday. So as I said, ladies and gentlemen, this week's video is actually spurred by one of our investor student, Mr. Yun. Mr. Yun actually wrote in to us, hi Gabriel, I wanted to ask you this question for quite some time. Now that's because Mr. Yun has been our fervent supporter for our classes for almost 3 or 4 years now. Yes, ladies and gentlemen, we conduct REITs classes every quarterly and it's been like that for the last 33 years. So we actually serve high net worth individuals like Mr. Yun, family offices that have actually opened up, particularly so in the last 2 or 3 years in Singapore, as well as actually a lot of key index REITs funds and hedge funds. So Mr. Yun's question was that I invest rather than trade in REITs. So I only sell when I feel the counter gets overvalued. Example, I sold off some Parkway Love at 4.93. In our classes, ladies and gentlemen, we had actually already forewarned that Parkway is a good sell at $5 or more, which it actually hit, earlier prior to this particular round. Okay, so yes, in our classes, ladies and gentlemen, we actually tell you when to actually exit out the stocks because essentially most of the time for REITs, there is such a thing called reversion to the mean, which has a high level of altruism, which will establish and show you in the class statistically. All right. So Mr. Yun says that, however, we have also seen REITs can fall much sharper than the broad market major clashes. Yes, ladies and gentlemen, you don't need to look too much and too far because in both my books, I've detailed in chapter 1 that while REITs on a risk-adjusted basis essentially are good investments. They have outperformed equities over the decades. There are 2 episodes that is actually during the pandemic crisis where REITs fell more than equities, as well as during the global financial crisis from 2008 to 2009, where REITs actually fell by more than equities as well. So Mr. Yun asks, I wonder if you ever reduce your holdings when you sense eminent bear. Yes, Mr. Yun, as well as actually detailed in my book, you notice that I sold off my stake in Fraser Centrepoint Trust. For those of you who read my book, you notice I have been major Fraser Centrepoint Trust major shareholder since its IPO in 2006. And I unloaded the whole episode, about 10 years later at $3, ripping me many millions in terms of profits, and that's why, ladies and gentlemen, I felt compelled to write both books, because it is actually quite easy for you, if you follow certain rules, to make millions in real estate investment trust. You don't need to be a very smart guy. As you can see, I'm not a very smart guy, even though I've been teaching real estate investment trust for the last 33 years. Now, Mr. Yin also asked, would you recommend ignoring market timing or just holding on to the positions through the bear market, and what is your personal strategy? Of course, all this are in detail I will be discussing in this Saturday's class. So for those of you who wants to have a good look-through analysis for your risk portfolio, as well as how I actually navigated through the crisis, do sign up for our class of this particular Saturday and enjoy the early bird special. Now, moving on, ladies and gentlemen, you can see in the last interest rates upcycle, the Fed actually increased interest rates from 205 one time, 2016 one time, and then 2017 three times, 2018 four times. So in total, 9 interest rate increases. So what's the parallel now? Yes, if the Fed now, ladies and gentlemen, yes, as I pointed out, if the Fed increases interest rates, by 9 times, it does not automatically mean that the rates will just have a huge fall. Yes, of course, if there's a surprise element like markets, okay, when the imminent increase is about to come in a big way, or in not the manner, in not the pace in which you had originally expected, you can expect share prices to take a hit, as what you have seen in the first 4 months of this year. But does it automatically mean that the next 4 months and the next, for the rest upcycle, it's going to be down? Let's index from 2015 to 2017. What actually happened is that you can see, right, for 2015, the REIT market, as exemplified by the REIT index, actually fell 17%, towards the time period in which the first interest rates was about to be increased. And then surprising, once interest rates was increased, and of course, as you know, the second one was only in December of 2016. The REIT market actually surged back. In fact, it has gained more than it fell. It's actually surpassed its previous high, before it actually hit its peak. So do you, therefore, ladies and gentlemen, actually just stay out of rates and miss this upcycle despite an upcycle of interest rate increases? So once again, ladies and gentlemen, don't get confused between interest rate increases and increases in prices for REITs. You can still make money in REITs in interest rate upcycle if you know how. And that's what we do and teach you in our classes. And then after that, you can see for 2017, despite 3 interest rate increases, as we can see here, right? When the Fed increased interest rates from 0.5 to 0.75 to 1.25 and 1.5%, that is effectively doubling it. What happened? The REITs actually exhibited a very gradual increase, so surprise again, instead of being a tumultuous spirit as what we saw in the first 4 months of this year, REITs have become a stability despite increase in interest rates during the 2017 period. Okay, let's look further, ladies and gentlemen. Okay, yes, in 2018, that's that sharp, that quick. If anything, it does tells you that a sharper than expected correction may be a good option time. And then guess what? In 2019, all memories of market corrections were totally forgotten because the REIT market actually went on to do new highs. Okay, so that was what encapsulated the interest rate upcycle. But what about the REITs individually? Okay, right. Remember, ladies and gentlemen, GCP Global, we emphasize that the way to be making money in real estate investment trust is to know when to go in, want to know what are the impetus that are driving the rates and when and how to sift for turning points. So in the last rate upcycle, you can see, let's say if you compare the prices before the interest rate increases, the first rate increases, remember, was in December 2015. So if you use September closing price 2015 against the end of the year closing price in 2018. So in that 2.5 years, or 2 years, 3 months effectively, right? Was it actually a good idea to be holding on to REITs despite imminent recession, despite not knowing at the start in 2015 when will interest rates upcycle finishes, which is exactly the same thing that you and I are experiencing now. But at GCP Global, we guide you with facts, we guide you with data, and we make sure that you understand the key impetus, right? So the key thing, okay, and then you have MIT, that was up 28%, very commendable over this period, and Maple Tree Commercial Trust, Capital DC, and I've told you, ladies and gentlemen, that essentially it wasn't surprised that the share price got such a big hit, because you can see at the end of 2018, the stock was at 103. For it to therefore go up or triple in value in just 3 years, as I've detailed again in my book, as well as what we teach in our classes, for it to do a correction, a severe correction as what we have saw, and what we term as reversion to the mean is nothing special. And of course, at GCP Global students who have been coming for our classes, you have been forewarned and you have saved this money, or avoided this total losses altogether, because we have won this in our class. And then the last table shows the 21st to the 30th rate. Okay, and this table, ladies and gentlemen, oh my God, look again. Okay, yes, 9 out of 10 REITs, okay, now with the exception of iREIT, actually post negative loss. And some of this negative loss are huge. Cycle, interest rate upcycle, there were 30 REITs, and 14 out of 30, that is almost 50% of the REIT lost money during this period. Okay, but then again, bear in mind that 50% also make money. Okay, so which are the REITs therefore to be able for you to make money? Okay, as you can see, ladies and gentlemen, in an interest rate upcycle, do not be afraid. Yes, you can still make money in interest rate upcycle if you know how. You must be positioned in the correct REITs. Which are the correct REITs? This is something we share in detail in our classes, and of course in our weekly video. But of course, you get a very condensed view only in the weekly video. If you want something that's detailed, that's needed for your multi-million portfolio in REITs to be able to sustain the weekly upcycle, the upcoming interest rate upcycle, do sign up for our class this coming Saturday. The early bird special runs out, before the end of this week. So do join us. And once again, if you can see, in my Business Times article, which was published last week, I actually discussed in detail what lies ahead of S-REITs. So the takeaway for this video is this: one is that yes, interest rate upcycle is imminent. There's a possibility of an imminent recession if the Fed overdoes what it does. Okay, but third, does it automatically mean that REITs will suffer and you should not just hold REITs in your portfolio? Well, the 4 points is left to be seen, because it depends on what kind of REITs you have in your portfolio, when to trim it, and what are the turning points. And this is what we discussed today in our class, and I hope you once again enjoy our this week video. Subscribe and send us an email at gcpglobalsg@gmail.com. Stand a chance to win if one of your friends, actually a prize rather, if one of your friends sign up as a subscriber. Okay, so once again, thank you very much to enjoy this big video, and continue to like and subscribe and on the notification for our subsequent video on a weekly basis. And happy Hari Raya Puasa!